Hello traders, Michael here from Storehouse Analytics. It's the 6th of April 2016. This is your midweek review. Let me start off by saying thank you to everyone who's watched the first video and all the feedback that I got. As I said, I look to improve these videos, so keep that feedback coming. I'm hoping to make them better and better as we go on. I'm not a video editor, but I'm learning to give you better quality. So this is going to be hopefully a frequent thing, maybe 2 or 3 videos a week, I hope. We'll see how it goes, but for now we'll start with the midweek review. As always, we start with the disclaimer. Remember that this is a risky business, it's speculation. Don't trade with money you can't afford to lose. You don't want to lose your shirt here. Okay, so we're going to go into the charts. Please pause the video and read the disclaimer in your own time. It is a risky business, so take care. Alright, let's go into the charts. I wanted to start off by reviewing the British pound, which I looked at in the last video. Just to quickly go over it again, because our trade has since ended and I wanted to review that. So as always, we start with the monthly chart, which when I looked at in the first video, remember I said that this was a first retest into this demand zone, came really close for a second one, and we're now third time in. As you've seen, I've written in the video here, the monthly zone is not fresh, so we can't consider it as part of our supply demand range or curve, and we have fresh supply above, so it's really tough times for the British pound. So we were looking to follow the trend in this trade, if you remember. So quickly going on to the weekly chart, as we said, the trend on the weekly chart was down, and we found a supply zone that we wanted to short at, and that was the zone that we looked at in the last video as a gap away, biggest representation of an imbalance, small time in the base, and we fell away from the zone. When we come back, we want to be interested sellers in this area. And then we went to the daily chart where we found a supply zone embedded inside that weekly supply zone, giving it more power. So we were looking to be short sellers here. Now the first trade was obviously on the daily chart itself. Taking the trade, you would be well into profit now if you had taken that trade, or maybe even out of your trade in this area of these lows here. This is not demand, obviously, so if you're feeling brave, you might want to keep some on to see if this area gets broken, but that's a discussion for another day, how to do that. So we went down to the 180-minute chart. I hope you guys remember this chart, and we looked at this zone as a zone to enter at. So we entered there. Remember we said first targets were here, second targets were here. That was hit pretty much in the same day, last Friday I think it was, and we were out of that trade. Now one of the things I wanted to show you all was another zone was created as price came down to our targets. So if for people who are worried, oh man, I missed the trade, I wasn't paying attention, you will always get other opportunities if you focus and you don't beat yourself down too much for missing. Yes, this is the ultimate entry and you would have made a lot of money, but I don't think there are many people who would have been able to stomach this pullback, haven't made all this profit. So let's be real. If you were down here and you'd shorted up here and then you saw the market do this, you would probably be, squeaky bum time kind of thing, really scared that you were going to lose all your profits. But the market created another zone, so you could have taken some off here, rolled stops down to break even or above this zone once you saw the zone created. And look at what's happened since price. This is the power of supply and demand trading. Look at what's happened since price and went to that level. It's back down here at these lows now. So that was a British pound. You had a couple of opportunities there to get into short trades on it, given that our decision matrix told us that we were in equilibrium on the monthly chart. Naturally, the weekly trend would be down because the monthly trend was also down, and also the daily chart was presenting us with an entry, which doesn't always happen, but in this case we had it. So trade is over, done, move on. Okay, so a couple of charts I wanted to look at with you all, and I've taken the opportunity to mark them up, is the dollar index. Just to speed things up, I've marked it off. So we have the dollar. As we all know, the big daddy has been in a rally from to last 2 years now, from 2014 going up all the way to this year, and everyone's been buying the dollar, and it's been a fun ride. Now we're beginning to see some stress on the dollar. It's beginning to feel the altitude at these levels now. And as you can see, I've drawn our momentum trend line, and we're beginning to see that in March, that momentum was broken. We have this zone, which is a really messy area, and it doesn't even meet the minimum requirements for us to call it a tradable zone. But it is an area where you want to be careful, because if there are going to be buyers in the dollar trying to push it higher, it's going to be here. Now, seeing that the momentum was lost last month, we now have a new supply zone created as a result of that loss of momentum. So we've created an area where at the very least we do not want to be buying into. We might not necessarily want to sell that area, but we definitely don't want to buy into that area. So yeah, and this is a lot of trading in this area, a lot of backwards and forwards filling of orders, but we had the biggest rally out of that. And if you take this to a bigger chart, you'll see I've marked it off as a 3-month demand zone. So that's the US dollar. So if we're going to be taking any trades on the majors, whether it's the Euro USD in particular, or the Aussie, or the Canadian dollar, or the Japanese yen, I think this is a chart that we need to keep an eye on. I always look at the dollar. As you'll see, it's the first on my watch list, so it's the first thing I look at every day, just to make sure I know what the dollar is doing, which will help me also in deciding what trades are quality trades. Now you'll see here that there are a big stack of sell orders above, which hasn't been tested yet. So this is another area going forward in future, many months ahead probably, that you want to be aware of if the dollar does get back up there. If we start breaking these lows, then we may start to see a lot of weakness in the dollar coming back down to this area, and ultimately this area. So that's the view on the dollar. The other chart that I wanted to look at with you all was the Australian dollar. I think I posted this chart on Twitter and on the TradingView chat and the ideas section. So if you want to see that review, you can go to TradingView and have a look at it. And I think on Twitter as well. So that's the picture of our supply demand range on the Aussie dollars. As always, we start with the monthly chart, looking at where we are in the bigger picture of things, get a bird's eye view before we go down to the smaller time frames. So price, as we said, is very high in that range. It's into an area where the charts have told us that there was a lot of selling here and it fell away. As you can see, it touched this demand zone and went straight back up. We have a slight issue now in terms of the profit margin for anyone selling the Aussie dollar, because you can see, just like the US dollar trend was broken, the momentum line on the Aussie dollar was also broken by the March candle, and because of that we've now created this sort of big area. Now if you wanted to draw it, you could draw it like that, you could draw it like that, doesn't really matter. So leaving you, if you were going to go short here, you must be aware that this area would be your first target. Now you're not going to go short on the monthly chart, obviously you're going to be looking to go down to the smaller time frames to minimize your protective stop loss and take the trade from there. But it's important to be aware of the larger time frame zones to know where there could be opposing competition to your trade. So the US dollar high on the price range, not an area where you want to sell, no way. Rather, you don't want to buy, excuse me, you definitely don't want to buy into this area. If price, as I said, may continue through it, we don't know, but for now we know that this is not an area we want to be buying into. We may be able to sell, and that we'll talk about that now. So here's the weekly chart marked up for you. As I said, here we've created, because of that break in momentum on the monthly chart, this is the representation of the weekly chart. As you can see, this area is a big area, and just like the monthly area, as I was saying, that monthly demand, you could draw this demand zone like this. I prefer, because I'm not entering on the weekly chart, to make sure that I give it as much room as possible. I mean, all these candles here were pretty much trading in the same price range, so I want to cover all of that. You can see that since price got to that zone, this is a weekly supply zone embedded inside that monthly supply zone, which gives it more clout. And since price has gotten there, it's been 1, 2, 3. This is the 4th week that price is struggling to get any, traction, get any further higher into that zone. So we'll see what happens. As you can see, the momentum trend line has been broken on the weekly, and we've now also got a demand zone. So again, if you're shorting in this area, be aware that there are some buyers lurking a good distance below. You'll still have a lot of profit margin, but you don't want to think that this, if the trade does work in your favor, that it will go all the way down. So this is our no sell zone and our no buy zone. Okay, notice I haven't said that this is an area where we want to sell. I definitely don't want to buy in that area, and I definitely don't want to sell in this area. I can look for opportunities to sell and opportunities to buy, but they may or may not present themselves. Okay, so going down to our entry time frame, this is the daily chart, again marked up, and as you can see, I've put here, this is the nearest demand zone. Again, an area, you can see what price is struggling to get through that, even with the last 2 days, the big drops. Demand is demand. People will be looking to buy in this area. Now, whether they can take it higher is another matter. Can they get it above these highs and for the uptrend to continue? Or will they get it high enough and then the selling pressure will take over, given where we know we are on the monthly chart? It's a wait and see. The question though that I wanted to put to you guys is this a demand zone that you would want to buy at? given where we know what we know about the monthly chart, that price is in the monthly supply zone. On the weekly chart, price is in the weekly supply zone, and then you have a daily demand zone, which if I put my cursor where it is, you can see on the weekly and the monthly charts where that area falls. So if you look at that, that is really high, right? That's really high. So this area is way too high for me anyway to be putting money on the table to say yes, I want to take this trade. Now for intraday traders, for short-term trades, obviously this is an area where you would be looking on really smaller time frames to buy. But as you know, I'm not a day trader. I do day trade sometimes, but it's very, very, very rare. But for a day trader, you definitely want to be aware that if you are looking to buy, this is an area definitely not to be selling into, for one, and it's an area you might want to look to pick up some Australian dollars. But for a swing trader, it's too high on the price range to be putting on long-term trades, to be initiating your long position. So for people who missed all this rally, who were thinking, wow, the Aussie dollar is really in a downtrend, I want to be selling, so they really didn't participate in this uptrend. This, many will see as this is our opportunity. We have an uptrend, we have a pullback, let's load up. It's a very, very risky area to be initiating a long position. I mean, it may work, but remember, we never know. It's the probabilities we're dealing with. So there you have it. So that's that. I hope that's useful information for you all. Please watch the video, like it, don't like it. Your comments are always welcome. Really appreciate the input. Let's see where this goes. If for those who are interested in following me, this is how to get in touch with me. I've given you the information here if you wanted to. I'm pretty active on the TradingView chat, and as I said, I'll be posting more videos on the YouTube channel. Twitter is the main zone that I will be posting going forward, my charts, but Facebook as well. Stock tweets I will use. That's the least active social media site, because I don't trade stocks at the moment. I have done, but at the moment, as I said, I am mostly on the Forex path right now. So, but I will be looking at, you know, the popular stocks from time to time, just to mix it up a little bit. So we'll be posting those on stock tweets. So like the videos, as I said, enjoy them, learn from them. If you wanted to hook me up to ask me any questions, if you wanted to take this further, or maybe have some mentoring, then please get in touch by email. I learned this. I thought I didn't need mentors, and once I learned it, I went my own way, and it's been a long, hard road. It turned when I got mentors. So I used to hate the idea of having a mentor. I knew the value of it in my career, but I didn't think I needed it in trading until, you know, it felt like I was hitting my head against a brick wall every time. I knew this stuff, and it just wasn't working. It all clicked when I eventually, you know, put my pride down and went for mentors, and it's been amazing since. So get in touch if you wanted to have a chat by email. Sometimes I can do Skype chats on request, that kind of thing, and we can talk. All right, it's been amazing as always. Take care, and remember, they're protective stop losses. Please use them. Stay safe out there. Bye bye.